Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Artiva Biotherapeutics.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Yeah, let's do it. So, Artiva. First things first, for anyone not familiar, what kind of company are we looking at here?
We're looking at a clinical stage biotech. So their whole focus is on their ALON-NK cell therapy platform. And being clinical stage, that means they're pre-commercial. Their value is all tied up in their research and development.
Right, which of course means they're not profitable. They're spending money to develop the product.
Yeah.
So what do the financials actually look like? What's the cash burn?
It's pretty much what you'd expect. No meaningful revenue to report. And yeah, they are unprofitable. Forecasts for 2025, for instance, are looking at losses around, $85 million.
$85 million.
But you have to remember, that's not a red flag in this space. That's just the cost of doing R&D. It's an investment.
Okay, given that kind of burn rate, the big question is always the runway. How long before they have to go back to the market for more cash? What's the risk profile there?
And that's actually one of their biggest strengths right now. They have a very, very clean balance sheet.
No significant debt.
Not really, no. And the big numbers, the cash runway. Based on their last report, they're good into the second quarter of 2027.
Wait, Q2 2027.
That's right.
So that's a lot of breathing room. It really supports their clinical goals without that immediate fear of dilution hanging over them.
Exactly. And when you consider their market cap is only around $81 million, that long runway is a huge piece of the puzzle. It lets them focus on the science.
All right, so the foundation is stable. Let's talk about that science then. The proprietary platform, ALON-NK. What makes this a potential game changer in what is, let's be honest, a very crowded biotech space?
This is really the core of the whole story. ALON-NK is an off-the-shelf cell therapy.
Off the shelf, so not personalized for each patient.
Exactly. It's what's called allogeneic. They use donor natural killer cells, or NK cells. Think of the older stuff, autologous CAR-T therapies. That's like getting a bespoke suit made.
Right, you take the patient's own cells out, engineer them, put them back in. It's complex, expensive, takes a lot of time.
Precisely. ALON-NK is the ready-to-wear option. It's scalable. They can manufacture it in bulk, freeze it, and have it ready to go. That accessibility is a huge advantage over competitors like, say, Kyverna Therapeutics.
Okay, so scalability is the first major advantage. But what about the key selling point? What does it actually do?
So its main function is engineered for deep B-cell depletion.
Okay.
But here's the crucial part. It does that without causing cytokine release syndrome, CRS, or neurotoxicity.
And that is a massive deal. For anyone listening, those side effects are the big bogeyman for these kinds of therapies.
They're huge. CRS is basically the immune system going into overdrive. Patients can end up in the ICU for weeks. Neurotoxicity can be just as severe.
So if ALON-NK gets the job done, that B-cell depletion, but without those awful side effects, that completely changes the game.
It does. I mean, that superior safety profile is what could allow for outpatient administration.
Taking it out of the specialized hospital setting.
Exactly. That transforms the patient experience and, of course, the cost. And that's why we're seeing them pivot so aggressively into autoimmune diseases.
Specifically refractory rheumatoid arthritis, right? I saw they got an FDA Fast Track designation for that.
They did, which just reinforces that the FDA sees a huge unmet need here and that Artiva might have a promising solution.
Which brings us to the recent market action. I mean, a 101% surge in a week? That's not just noise.
No, that's a major signal. The price action pushed up to $6.34, creating a clear pattern of higher highs, higher lows.
And what are the technicals telling us? Do they support this move?
They do. All the major moving averages are pointing to a strong uptrend. You've got the 50-day SMA around 369, the 200-day near 295. It's a solid base.
Is it getting overbought, though, after a run like that?
That's the interesting part. The RSI is at about 65. So it's showing strong momentum, a lot of buying pressure, but it's not yet in that classic overbought territory. There's still potentially room for more accumulation.
So what was the specific news that triggered this? What was the driving force behind that sentiment shift?
It was all about the data. The market mood turned so bullish because of the ALON-NK data they announced.
And what did that show?
It showed deep B-cell depletion in 23 out of 23 patients by day 13.
23 for 23. That's a perfect score.
It's a perfect score on the primary mechanism. But, and this is just as important, there were no severe adverse events reported.
So it works, and it's safe.
That's the headline, and that's what's giving analysts so much conviction. We're seeing a consensus price target of around $18.25.
$18 from a base of around $5.40. That's a, what, 237% potential upside?
Yeah, and some targets are even higher. This isn't just speculation. It's based on the idea that the strong data has significantly de-risked the clinical path forward.
Okay, but I have to ask about the insider sales. We saw the CEO selling some shares back in November and December. After a huge run-up, some might see that as a red flag.
It's a fair question, but you have to look at the context. Those were very small, routine sales.
How so?
They were done under what's called a 10b5-1 plan.
Which means they were scheduled way in advance.
Far in advance, before the data and before the price surge. It's just a way for insiders to liquidate small portions of their holdings without being accused of trading on non-public information. It shouldn't be seen as a lack of conviction.
Especially when you see the major institutional holders are still in.
Right. Their stakes are stable. They believe in the long-term story.
Okay, so that puts that to rest. Let's look forward then. What's on the catalyst calendar? What are the key milestones investors should be watching for?
There's one event that is more important than anything else.
And that is?
The update on their FDA pivotal trial plans for refractory RA. That's expected in the first half of 2026.
H1 2026. So that's the big inflection point.
It's the critical inflection point. The market is waiting for that alignment with the FDA on the trial design. Getting that clarity would de-risk the timeline even further.
And are there any sort of broader sector tailwinds helping them out?
Yeah, I think so. We're seeing a general rotation in biotech, specifically into autoimmune therapies. And that might be driven by the expectation of future rate cuts, which always helps these R&D heavy companies.
So the investment thesis here isn't really a day trade. It's more of a swing trade with a 3 to 6 month window looking toward that H1 2026 news.
That's the main thesis, yes.
Yes.
But we do have to talk about the risk.
Of course. It's clinical stage biotech. The risk is always there. What's the bear case?
The number one risk is tied directly to that H1 2026 catalyst.
A clinical trial setback.
Exactly. Either they can't agree on a pivotal design with the FDA, or the FDA requires a trial that's much longer or more expensive than expected. Any negative feedback there would be a major problem.
And since they're unprofitable, a major delay ties directly back to that cash runway we talked about.
It does. It could force them into a dilutive financing round at a bad time. That's the primary risk.
What about secondary risks? I mean, the stock is obviously volatile.
It is. A low market cap stock that just doubled is going to have exaggerated price swings. That's just a given. But I would argue that the strong early safety data helps mitigate some of that. The high analyst targets already have a buffer for that kind of biotech volatility baked in.
Okay, so let's try to summarize this. If you were to give the elevator pitch for Artiva right now, what would it be?
I'd say Artiva offers a potentially breakthrough therapy in allo-NK. It has shown it can deliver the efficacy needed for severe autoimmune diseases like RA, but with a vastly superior safety profile.
Which opens the door to outpatient treatment.
Right. And it's backed by an FDA Fast Track designation, strong early data, and a long cash runway. All of it is pointing toward that key catalyst in the first half of 2026. It's a high-conviction biotech play.
So the final thought here, what should people really keep in mind?
Keep a very, very close eye on any and all communication about that FDA alignment for the RA pivotal trial. That's the single most important piece of news that will determine the next chapter for this company.
If you found this analysis useful, remember to subscribe for more Smart Wealth Talks tomorrow.